Okay, welcome back to the educational videos. In this one, I'm going to look at candlesticks and bars. I'm going to try to simplify them. Now, in front of you, you have the traditional bar chart. It features 4 data points. And any of these, they all say the same thing. In fact, I'll go ahead and zoom in so you can see the shape. I'll even zoom in even more. So, when you look at a bar, you can see that there is a body. So you have a body like that. You have a tick mark, if you will, on one side, the left side, and then you have a tick mark on the right side. And all of these mean something. And the way you need to look at this is that the tick on the left side, that's the opening price. That is what price we were trading at the beginning of this time frame. Now, in this case, it's daily. So each one of these bars represents the daily price of the Baidu CFD market. You can see that we opened here. Now we have this long body, and that's the entire range of the day. And over here on the right-hand side, that's the close. So on this day, we opened at this price and closed at this price. Therefore, it's a down day. So I will go through a couple bars here to discern exactly what has happened. Well, on this big one here, we had a very wide range of trading during the day. Looks like we opened, and I'm going to guess it. I'm not going to go through and pick the exact price, but right around 192. Looks like we tried to rally a little bit during the day. We did gain a little bit, but we sold off rather drastically and then closed right here at about 186-ish. So a pretty negative day, and you can see we had a nice wide range. We sold off. We did bounce a little bit from the lows, but nonetheless it was pretty negative. Now, of course, this works in both directions. So, for example, we opened up on this particular day, this bar, at about 175. We rallied quite a bit to about 180, but pulled back, closed somewhere around 176.25 or so. This is a positive candle. Now, we gave back quite a bit of the gain, so that's something to keep in mind. But nonetheless, this shows that the market gained that day. This is a much more bullish or positive session. Over here, you can see that we opened somewhere around 183 and closed somewhere around 188. So we gained $5 that day. Pretty positive move for Baidu. Now, most of you are aware of what a line chart is. This is just a simple way to show the same thing, but with more information. It shows you what the attitude of the day was. Next are candlesticks. Candlesticks are treated the same way, and you will see them either black and white like this typically. They can be any color, but the most common are black and white, blue and white, and green and red. Green being positive, red being negative, white being positive, black being negative. Most of you are going to be trading Forex, and this seems to be the color scheme that most Forex traders stick with. So I just wanted to show you that they do look a little different depending on where you look up price and stuff. And you can make these in any color you want. It's just this is a standard convention more than anything else. Well, if you look at this, it looks very similar to the line chart and the bar chart. And there's a reason, because this also has 4 data points. So what happens with a candlestick is you get a body, which gets filled with a color depending on which direction the day went. So red being negative, green being positive in this case. You also get a couple wicks. And this is the same thing as the bar chart. You have an opening price on the left-hand side and a closing price on the right-hand side. Now, the way you know this is the color of the candle. So, for example, on this red candle, that's the opening price and that's the closing price. The body, the filled in part, is what we actually gained and or lost for the session. So in this case, I'm assuming that it's red. If it were green, on the other hand, then the beginning of the candle for the day here would be at the bottom, and then the end at the top, because we gained in price. And that's the benefit of candlesticks. You can look at them very quickly and see, okay, well, we have more red sticks lately, so looks like a negative market. Now, as I'm sure you've guessed by now, the candlesticks have these wicks, and that tells us what the day was like as far as the range. You can see that we had a little bit of range on each side. So let's look at a couple candlesticks here and see what there is to discern. This is negative. It's red. That's the first thing you should know. And because of that, the top of the body was where we started because we ended up lower. It's kind of a no-brainer. Looks like we opened at about 180, and it looks like we dropped to about 173. Very negative day. Over here on a green candlestick, looks like we opened at about 176. We did fall a bit during the day, but we bounced enough to close higher at about 178. Same thing here. We opened up at 183, and it looks like we closed higher right here at about 185. So you can see it's pretty straightforward. This all gives you more information than a line chart because, you know, we did go higher there, but as you can see, we gap, for example, and a gap is a very bullish technical signal. A gap shows that we skipped all of this. That means there was a lot of upward pressure and we shot higher, just as there was a gap lower. Very volatile market. The line chart doesn't show that. It just shows that we rallied and fell. So because of that, candlesticks and or bars are considered to be superior charting methods. Now, my own personal take on this is there is no difference between bar and candlestick charts, and I can trade them both equally. I recognize they give the same 4 data points, but a lot of people do like the candlesticks, so I will probably use that a lot in the video series. But the takeaway, the main takeaway of this is both candlesticks and bars have 4 data points. They have an open, high, lows, and close. So this 1 is somewhere on this side of the candle or the bar. The 4 is on the other side, and that's determined by the color or the tick marks if it's a bar chart. And then the high and the low stay the same. Coming up next, we'll take a look at how to determine these candlesticks, and there are a few basic ones that traders will be looking for. But really, at the end of the day, you shouldn't get too hung up on the shape of the candlestick. There's nothing magical about the shape. What you want to look into is the psychology behind the candlesticks. So I'm going to probe that a bit more. There are literally hundreds of candlestick shapes and formations and everything else. So you're a little bit hard-pressed to trade more than just a few. And quite frankly, I've made quite a bit of profit off of just 2 particular candlesticks. But knowing the sentiment of the market based upon candlesticks, that's actually more important. So we'll look into that in the next candlestick video.